Welcome to Not Your Ordinary Parts, a podcast where we talk about hard things associated with the human experience with the goal of increasing awareness, growth, and healing. You may hear information from professionally licensed therapists, life coaches, healers, doctors, etc. This information is not medical advice or therapy and is not meant to replace actual therapy or instructions given by a doctor or personal therapist. In this instance, this information is not tax, legal, or accounting advice and is for informational purposes only. It's not intended to provide or to be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, or accounting advisors before engaging in any financial transaction. I'm your host, Jalon Johnson. My guest today is Norman Barnum. Norman is a business executive with over 30 years experience in leading both public and private sector organizations as a chief financial officer, chief executive officer, and currently as the managing partner of Barnum Group LLC, a financial management consulting firm founded in 1991. Norman earned his Bachelor's of Science degree with a double minor in business and chemistry from Xavier University of Louisiana and his Master's of Business Administration from Eastern University in St. David's, Pennsylvania, with a concentration in finance and finance management. Norman's early experience as an Internal Revenue Service agent acted as the catalyst for the creation of Barnum Group LLC, where he serves an entrepreneurial group of clients for whom he advises on three distinct areas of focus: business acquisition, business growth, and business exit strategy. Norman's goal is to use his experience and expertise to allow his clients to remain stress-free in managing their businesses, assets, and financial goals, and is confident that the tools he provides will allow for his clients' success not only now, but in the generations to come. So, Norman, welcome to the show. Thank you so much for being my guest.
Hey, thank you for having me. Look, you made that sound so good. I love that guy.
Well, I gave a brief introduction, but so that the audience can get to know you a little bit better, would you mind giving us a little bit of background about yourself and how you got to who and where you are today?
Sure. Look, I'll take the story or start my journey. I come from a family of four sisters and myself. I was the only boy. My father was in the United States Air Force, and so I was an Air Force brat with my sisters traveling from base to base until we settled in New Orleans upon my father's retirement. And my journey effectively began at Xavier University after I graduated high school in New Orleans with a concentration at the time in pre-med chemistry, as I was to follow my sister's footsteps and become doctors, as my mother and father told me that was the plan. And you see how that worked out for me, as quantitative analysis was not going to be my thing in chemistry. So I changed my major after my sophomore year to accounting. And it was because truly my interest had always been in commerce. And I was the kid that used to bring my grandfather to the supermarket every Saturday morning after he wasn't able to drive anymore, and would consciously go with him into the supermarket and tally his groceries in my mind, and then would compare it to the receipt at the cash register to see if I could do it by myself. And that was the beginning of my love affair, if you will, with commerce and capitalism. It started in going to the supermarket with my grandfather. I graduated Xavier University with a BS in accounting and a double minor in business and chemistry. And my first job was with the city of New Orleans as a sales use tax auditor for 3 years. And then I transitioned to the Internal Revenue Service as a revenue agent with the Tax Reform Act of 1986. Date myself, that's how old I am right now. But that was the beginning to understand taxation as a constant and how people either benefit from taxes or don't benefit from it. And it was that eye-opening experience being on the government side of the fence as an IRS revenue agent, where it's the first time I saw people of means had their CPAs or their tax accountants, and they battled it out and they got positive outcomes. And people without means took the brunt of the load and took the liabilities. And that was the beginning of me to really explore what the opportunities could be to serve folks on the other side of the fence. And that was the catalyst for me to create the Barnum Group, which was actually to serve clients that did not have the type of representation as a revenue agent I saw they needed. And it was definitely a pain point in the African American community. So that's pretty much, Jaylon, what got me started and began my path and my journey to which now has become Barnum Group LLC. With I have over 150 personal clients and over 50 corporate clients. My goal has always been to add value for my clients, create a mechanism to understand what their outcomes they were trying to achieve financially, and create the strategies and a roadmap to achieve that in a way that will keep them tax compliant and give them the greatest opportunity to grow and accumulate wealth.
Thank you for sharing that. Thank you so much. You've been doing this now for over 30 years. And I wanted to ask, when you were growing up, I mean, you kind of mentioned, the experience with your grandfather in the supermarket, but did you see entrepreneurship or, I guess, financial literacy modeled when you were younger? And if so, is that kind of what helped you get to where you are today?
Interesting question. And there was two distinct things that happened for me. I had the Air Force experience on the Air Force Base, which was very much scripted, if you will. So there was not entrepreneurial thoughts. You had people that followed the chain of command. Your parents were in the military, and you followed the chain of command, both on the base and within the family unit. It was not until we settled in New Orleans and my father retired that the first aspects of entrepreneurism I started to physically see. And in New Orleans, a lot of people can tell you that the big thing was in neighborhoods, you would have sweet shops. And the sweet shops would be maybe in New York, you would call them a bodega, or,
Mm.
other aspects where this would be the place where you would have your candies, your sweets, your ice cream, your snowballs. And that was the first beginning of me seeing a family member, my aunts and uncles had their own sweet shop. And I saw capitalism. I saw inventory being put into the sweet shop, work schedules. I was able to see what profit was, the difference between their costs and what they were charging. And then some of the aspects of what makes success. Uh, it was always relational, that you had relationships, and people wanted to feel that they were supporting not just my aunts and my uncles, but they were supporting their community in a fashion that gave a return that was positive. So I would say that was the first time that entrepreneurism that I could really grab onto, I saw. And then as I got older, I think what I said earlier, what I saw was the natural aspects of the hustle.
Mm.
Now, the hustle in the African American community could have meant a number of things. Shade tree mechanics that did not have a shop, but you went to them because they could get it done for you. The sweet shop owner that might not have the storefront location, but this was operating out a home-based business. Um, Even the beauticians or the service providers that all were doing this, and they were doing it in cash. It was not a credit card or necessarily a bank account, or even some craftsmen that were doing subcontractors for contractors never quite did the next step. And that next
Mm.
step was to incorporate, get a business bank account, and actually file taxes regarding those activities. And I think that was another aspect once I got to Xavier. And I started to see folks that were now being audited when I got to the IRS. that did not have the good habits of business and building business habits for scalability. They just were hustling. And they knew how to make money and they knew how to provide for their family, but they did not know how to do business. And I think that was the thing. There was one specific case that I had at the IRS, which really drove me to leave. And it was an African American truck driver who was on a Schedule C. He had maybe a seventh or eighth grade education, a hardworking man, and him and his 14-year-old daughter prepared the return. It had mistakes. And I reviewed the return. I sat with him, his daughter, and his wife. And I said, listen, there'll be a liability on this. There'll be some civil penalties, but we can get through this. And I was pulled into my group manager's office, and I was told that I should write that case up as a criminal prosecution. And I was floored that, I was not a rookie. I had been 3 years professionally at the city of New Orleans. I was my first year as a revenue agent, but it didn't feel right. This was not criminal. This was a man that was trying to be compliant and make mistakes. And so, Jalan, what that did is I reflected upon it that night. I spoke to my father about it, who gave me some sage advice. Son, I wouldn't mess with the IRS. I thought, okay, that's helpful, Dad. And when I met with that family the next morning to conclude the case, my group manager called me in again. And she was a white female, maybe middle age at the time. And she said, so Norman, are you going to do what I effing told you?
Wow.
And at that moment, it was so clear to me. I said, look, in my professional opinion, this is not a criminal case. I will write it up civilly. And she told me I just punched my ticket out of the IRS. And I told her, you do what you need to do. And Jalan, that's how a brother from New Orleans got to Philadelphia. True story.
Wow.
True story.
Wow. That had to be difficult because seeing him hustling,
Yes.
and just trying to do the right thing and then being penalized for not having the knowledge of how or what to do. That had to be hard. And I mean, morally, it feels like you had an obligation to know that he wasn't doing anything criminal and to not pursue that. And it sounds like that's what you did.
That's exactly what I did. And what I was told by some senior agents that got wind of what was happening is, Norman, you need to just play the game. You can be all the way to a GS 13. You can have a great career here. You're very smart. You're well liked. Basically just do as you're told. And that was 28-year-old Norman. And I was raised with my father. I'm Norman Edward Barnum IV. I had my own integrity, my own brand. And I couldn't do it.
Right.
I would not do it. And let's put it like that. I wouldn't do it. And I made it clear I wouldn't do it. And I paid the consequence. I had to negotiate a resignation. Everybody that had been a reference for me got a phone call by the IRS.
Wow.
It was pressure. There was exerting pressure. And what I was able to negotiate was a clear reference, as long as I did not try to apply for a job in the Southern District. And fortunately, my sister was a chemist at Roman Haas in Philadelphia, took her wayward brother in, that messed up his good government job, and the rest is history. I moved to Philly and really created another persona for me in the nonprofit space, the Delaware River Port Authority, Port of Philadelphia and Camden, WYB Public Television, Ogontz Avenue Revitalization Corporation. I became who I needed to become in Philadelphia, and I'm forever grateful for my time in Philly. But that genesis started from that taxpayer and my unwillingness to be a part of a system that was just grossly unfair.
Right. Well, I appreciate you standing up for what was right. And it sounds like they gave you an opportunity to punch your ticket to become who you are today. So that may have been something that was beneficial for you.
It's funny how things happen in your life and in your career, but now in retrospect, they had all the right and obligation to do what they did to me because I refused to follow their protocol. I get it.
Right.
And I had to create a path that fit for me. And that is the genesis and the thing that I really admire about capitalism and the American experience. You can make it happen. You just have to commit to it. And I committed to not doing that tax return that way. And then I got to Philadelphia and I committed becoming the best version of me in a form that could create value for myself and value for my community. And one of the things that I've always been troubled by is the lack of Black wealth, the inability for us to create wealth in a standard against our peers and other groups. And so it really created my path in a way that I would not have scripted that way, but I wouldn't change it.
Gotcha. Well, one thing about you that I admire a lot is your strong desire to see others be successful. And that isn't always something common, especially with people of color.
Yeah.
Um, and
Well,
in your experience and what you've seen based on your 30 years dealing with finances and helping people, why do you think that is?
um, when you are dealing with scarcity of resource, all right, there's never been, I would say, abundance of resources in the African American community that has been tied to wealth or the creation of wealth. We have abundance of culture, of spirit, of religion, but the things that create the abundance in capitalism, we haven't had that. And so I've seen and I've witnessed the crab in the barrel syndrome,
Mm,
where I now have resources. I've now achieved something. And because I don't believe or I have not been able to create growth and expansion of these resources, I hold on to it tight and I don't bring anybody else up, because
mm,
now there might be less resource for me. And capitalism, that doesn't work because you have to expand the pie. And furthering that, that's why when we now look at diversity, equity, and inclusion, and the moral argument for DEI is now getting lost in the phenomenon that's called woke. Well, really, what you're talking about is DEI is a growth strategy for the economy. You do not grow your economy by being exclusive. That and all companies that understand that are growing. And I think for us as African Americans, I need to infuse what I know into you so that you are able to be the best version of you and grow the pie. And the more that we grow the pie, the more abundance there is for all. And I think that if you ask me, the number one thing that has been an impediment to us is we have not grabbed onto that belief in a way and structured it in the capitalism of the American experience that says, I am not good if I'm the only middle class Black person on this block. I
mm.
need to have 10 others like me. What can I do to make sure that that is an opportunity? And Jalan, what you know with me is I always try to infuse opportunity in my clients as a growth vehicle for them. And then there are a number of things that can generate from that instead of me saying I'm the guy that got it and I just want to hold on to it.
Another thing is a lot of times, like you mentioned, being the only middle class person on the block, like sometimes people get a measure of success and then forget where they come from. Do you think that's also related to that crab in the barrel type of mentality?
I will put this in the form and you'll see it is I'm a HBCU grad. I went to Xavier University. Uh, my wife is a Xavier grad. My generations of Barnums have gone through Xavier. And I've got my MBA from Eastern University, which was predominantly white Christian university in uh, Philadelphia. And the experiences that I had at both of those religious institutions, I valued. But I valued my HBCU experience more than my Eastern experience. And the reason why was because my culture and who I was well defined as part of, servant leadership at Xavier. And what I learned at Eastern was the tools to become the best version of the finance professional that I could be in that part of my career. And I valued that too. But I thought it was more important to keep myself grounded as an African American male and define myself as a Black capitalist African American male than just a MBA from Eastern. And I
Mm.
think that is the thing sometimes for us. We may have started at HBCU, but we get a furtherance of our degree or our experience at a traditionally white university. And then all of a sudden, I'm not referring all the way back to that HBCU. I am now just an Eastern man. And that is where you would say, when you forget where you come from, I've seen that dynamic. And the one thing that I will not do is forget my roots, what's my binding force. And until I'm able to create and reinvest in the HBCU at a level that's consummate to the endowments of traditionally white universities, that's what we need to do. And at some point, when you bring equality in resources, then maybe I would feel the same about each institution, but it's not there. And I make it a conscious effort to keep myself grounded as a Xavier grad. And that was my foundation. And I think that's what is important to me. And I've seen some folks lose that.
Mm. I mean, there's so many complexities to um, not being resourced properly,
Mm-hmm.
and then getting to a point where you have success and forgetting where you come from, or not wanting to pull others up with you, or not having a sound relationship with money and finances. Because I mean, we see it a lot with individuals that may go to the league or the NFL. Once
Mm-hmm.
they get money,
Mm-hmm.
because they don't have a good relationship with that dynamic of wealth, like things just go to pot. Um, and we talked about that, and that was something
Yes.
that I knew would be probably a good hour if we got into that by itself. But I did want to I did want to have you talk about that as well.
Listen, I've had the good fortune of having professional athletes as clients, okay, and professional boxers as clients. And that relationship with money and the scarcity, if
Mm.
I've never had it and now I got it, how you act with it is more short term than long term. And trying to get a long term perspective has been the biggest thing when I deal with the athletes, to say, look, it's here now. This is what we want to do over a period of time. Let's think about the salary as the beginning of your annuity. Let's look at investments that will give you a foundational block that we can budget. And I think sometimes these are the first words, like your budget, the monthly reconciliation of income and expenses. The thing that is left after that that we want to house in a special fund over here, or a long-term vehicle. And that has been a huge challenge. The leagues, all of the professional leagues, are trying now in a much more volume than when I was started in the 90s, which trying to educate the athletes, a lot of them predominantly African American athletes, to have a longer term approach and then have credentialed individuals to be part of their team, if you will, to allow them to be long term. And it's still a challenge. I think the lack of knowledge and information that has been transitioned from one family member to another generationally, because we've missed that, you don't have that trust factor that says, okay, maybe you should take that salary and instead of buying that $150,000 car, let's get a $100,000 property that has income potential.
Right.
And we can get that car based upon the revenues tied to that property over a period of time. That has been the biggest thing, and I think the biggest impediment. Don't jump. Let's wait. We can get all the things that you've never had before, but we can get them gradually. Because if you force it into the spigot, it's not going to have a good outcome. And I think, Jaylon, that's been one of the big things that it's still a struggle. You see it all the time. Athletes, after they retire, they go bankrupt, or sometime even during their careers. And it's because they want to do the right thing for their family, but they're doing it in a way that will not allow them to be long term.
Right. And I think, I've heard a statement that some people say like they want to bring the hood with them once they make it. And when you do that, like you said, it's forcing it, and it can't be long term because you have so many people that have their hand in it that didn't do anything to earn it but feel entitled to it. And
Yes.
because we have this desire to be loyal,
Yes.
sometimes that desire to be loyal can, it taints our vision, and in the long term it'll lead to bankruptcy, like we see.
I would tell you, I have felt the same pressure that the athletes felt. Not that I have those resources that way, but the loyalty aspect.
Mhm.
And I think I'm still the same guy that went to McDonald number 6, public schools in New Orleans. Uh, I'm still that same guy, but I realize that I can't do the things that I used to do when I had that crew. And Philadelphia allowed me to become Mr. Barnum. And then when I returned back to New Orleans, people knew Norm. And so, who is this Mr. Barnum? And so that pressure to still feel like, no, I'm that same guy, but Mr. Barnum golfs. I'm not playing basketball. You know, Mr. Barnum is eating wine and cheese. I'm not on my 40, you know? And I think that transition and still let my boys know, no, I'm still the same guy. I got different tools. These are different tools in the tool chest that allow me for a greater outcome. I want to show you these tools. I want you to be a part of these outcomes. I want to be able to uplift the hood, not bring the hood. And I
Mm.
think that's a struggle that all of us feel. It's an internal struggle because I don't care what my credentials are, what I've achieved. There'll be some times, whether I'm in a project or I'm in a boardroom, we're getting the same hit. It doesn't make a difference. And as an African American male, you feel that. You're like, hey, I'm still taking that L and I've achieved all these things. And why am this L coming my way? Because that is what you're doing when you are not equal. And I'm not going to cry about it. I'm going to get the tools that will help bring me or make equality more available. And for me, equality has been driven in a capitalist way as opposed to just social or political. And so I'll protest, but I think the greater protest is getting a good or service that will require anybody and everybody that wants it, and I can add value to it and I can create profit with it. And if you want really quality, you get green. Green will get you as close as you can. And then with green, you see people then move that to PACs and political influence. But it starts with green. You have to be able to get green. And I believe in that. I want my clients to be able to do it in a way that honors who they are, where they came from. But let me be clear, the outcome is simply this. I don't do anything for break even. I do it for profit. And profit is not something to be ashamed of. It's something to be able to grow, to be able to share the ability to make profit, to transfer that information down generationally. And those are the things that, as an African American, that we need to do to infuse that now creates a greater sense of our well-being and to bring us back a greater ability to have mental health, mental wellness, when you have resources and not stagnation and starvation.
I love that. And we're a half an hour in, and my listeners may be like, "What are y'all talking about business and taxes for?" Because my show mainly centers around mental health.
Yes.
Um, so this episode may have seemed a bit off topic, but when you're dealing with money and finances and taxes and the IRS, that can without a doubt cause anxiety and affect our mental and emotional health. So I think a good question to get into the meat and potatoes of the interview is, what is the IRS and how difficult can it be dealing with the IRS?
Well, the Internal Revenue Service is relatively a new entity in the American experience. The IRS and its predecessor was not created to create fairness and equity in taxation. The taxation has always been a means to affect revenue for entities to achieve political outcomes, namely war. You have to be able to fund aggression. And so that's been historically, and that was one of the things that was needed for World War One, is how do we fund this? Literally World War II. What came out of that was the creation of the Internal Revenue Service, because you have to be able to create revenues at a federal level that will provide the security and the wealth and integrity and now the social systems for the benefit of the greater citizenry and American. So the IRS was created to be a mechanism of revenue for the government to achieve political outcome. All right. Now, what we have is a tool for the rich. The IRS and our tax laws and our tax structures are basically created to create tools or avenues for people of means to reduce their taxable income. That's it. And now, if we've morphed through various iterations of trickle down, trickle up, what our tax rates need to be, both corporate and personally, what we've morphed to is a system that is inherently unfair. It's inherently tilted towards the rich. It unfairly taxes the middle, if you call the middle class, and it has been a system that was created to promote family by your tax uh, classifications and the deductions that are tied or the credits that are tied to married children filing joint versus separately head of household or single. And so our challenge now is to actually create a internal revenue service that actually serves the citizens in a fair and equitable manner, that will actually create the highest ability for the government to generate taxes for revenues for us, but to do it in a way that does not unduly impact people of lower means. And that's the challenge now. It has been the challenge for several election cycles. You've heard the next thing is that, the Biden administration allowed more resources for the IRS so that they can improve their data infrastructure, their computer infrastructure, and at some point their compliance and enforcement mechanisms. And as a taxpayer, I understand that. As a professional tax preparer, I understand that. As a taxpayer, I don't want to audit. I don't want to get a notice. I don't want to have this intrusion upon me. And right now we got a service that is operating in a 1990s mindset in 2024. And so you needed to have more resource for them. It needs to be done in a more equitable fashion. And the political fight over how that we collect and evaluate taxation as a society will be ongoing. I do think there's a couple of things that have changed during my time, and that all is with the aspects of AI. AI is going to change the game, is changing the game. The level of fairness, if we want to have it, and the ability to automate and collect and evaluate taxation in the aspects of AI, can totally redefine what Americans feel and how they feel about taxes. And that's part of a dialogue that I hope to be in at some point. And we're in a very inflection point right now, Jalan.
Yes. I think a lot of us may not truly understand the way the IRS operates or the reasons why there are tax laws or who they're written for. And you kind of touched on the fact that they're not really written for the middle class or people with lower income.
Mm-hmm.
But I think a lot of us still are under the mindset, taxes are for roads and for this and that. But why really do we pay taxes?
Here it is. I think in 2008, the fight over Obamacare was really about how you impact the budget and why taxes are important. And you'll hear this: healthcare and social services, Social Security, our social network, and our ability to secure ourselves with our defense. Those are, like, if you call me, the core tenets of our budget. And why taxes are important is because we have to be able to pay for our American way of life, if you will. And democracy is not free, and capitalism is not free. And the only way that you're able to continually to afford this is to have an economy that's growing, all right, and taxes that are not regressive but fair. And that has been the fight, because who defines fair?
Mm.
Who defines regressive? And if it's a rich person define fair, it's going to be, my tax rate is lower. And that's more fair because, in theory, the trickle down, I have more to invest in my business, I can hire more people, and that will have a greater impact for all. And what we've seen in different economic cycles is it doesn't quite work that way, because rich folks have not necessarily invested and then pushed that investment into their company and made more hiring. What they do is possibly take that additional income and they will put more money in stocks. They will buy more of their own stock back, but it does not materialize into a hiring and expansion. And I think those are the things, if you can create the tax law that would stimulate that. And there have been some times where job credit, job retention, you see these credits that come on that will stimulate a person to do actually hiring and expand your payroll. You can see that, but it has not been done with the consistency over an extended period of time that has created a legacy, if you will. And I think that's the challenge that we have. We go back and forth from a Republican administration to a Democrat administration and where we want to cut this budget, but there's not been the consistency on the governmental side that says this is the best growth opportunity, this is the most fairest way to pull revenue from our citizens with this tax structure. You've seen more consistency in the application in the stock market and the markets itself, and that's why you start to see some conversations about why can't our social networks or our social investments mimic the market, and maybe we should put money in the market. But the market is designed for profit. our social networks is designed for the good of the people. And that's when you start having those conversations, Jalan. And, I'd like to be part of those conversations. And I think true equity is when you have everybody in the room during those conversations. And then you're able to now create a process, a procedures, a policy that will, as much as you can, fairly impact all of us and just instead of some of us.
We were talking about tools earlier, and I think that for individuals who, may not feel like taxation is fair, what are some common tax deductions that the little people may qualify for but may not be aware of?
It's getting harder. I will tell you, most of the middle class, if you will, operate on a couple of schedules, Schedule A and Schedule E. Schedule A is your itemized deductions, which will, over my period of time, has been crunched to what is allowed and what is not allowed. You used to have credit card interest that you could deduct back in the day. Your state and local taxes were not capped as they are now. The SALT deduction is capped at $10,000. And so for the little people is if you can really isolate all of your activities that will be applicable for a Schedule A and all of your activities tied to your home or your rental properties on your Schedule E that would qualify for energy credit, solar credit, HVAC. Those are the things that we all spend money on, and there may be a potential credit tied to it based upon your income level that you may or may not be missing. And that's the ones that I've seen most often, because everybody's got their mortgage interest, their taxes, their charitable contributions, depending on their business, unreimbursed employee business expense. Those are the big hitters. But then it's those credits, child tax credit, earned income credit, education credits, which are huge for what I call the middle class. And when you can start trying to create a pathway for a higher earning, use those credits. I would say those are the key ones: Schedule A, Schedule E, and a plethora of the credits that are tied to child, education, home improvements.
Now, I remember when I first got the entrepreneurial bug, I call it, and I learned about home-based businesses and the
Right.
tax credits that are available for home-based businesses. So if someone has a home-based business or wants to start one, what are some advantages to home-based businesses?
Well, I mean, one of them, you don't have a commute. That's beautiful, So I like that. But it's all on space allocation. How much of your home is allocated specifically for this business, and how much income can you tie to that home-based business, and then apply that to the plethora of deductions that you will be available that would reduce your taxable income. Now, what this brings you to, though, is an area that is not based upon your home, but it's on that taxable income, and it's deferring income. Because I've seen that's another area where we miss, where if you created a retirement vehicle and you got excess money, put it in that vehicle, which would be a deduction against your home-based business, reduces your taxable income, and then starts helping you create wealth long term. I think those are the things, as I start to grow a individual through I call it their life cycle of their income. When I get a person to the point where we're deferring income, it's a milestone, because now we've figured out budget, we figured out expenses, we figured out excess, we got an emergency fund, and now we're deferring income and we're looking long term. And I think those are those steps. Like I said, there's no magic, there's just those steps. But once you get to that step, you're like, okay, all right, I've taken care of all of my short term, and now I got a long term vehicle. And then you can start to really build. And then there's other insurance vehicles that you can help on that side. And then expansion from home base, maybe to brick and mortar, or expansion of your home base into more of an online presence and multiple online presences. And I've seen and worked with clients in a number of areas. But believe me, the bottom line is this: when you have a good strategy and a plan that you can execute, you can make money, we can defer, we can reduce taxes, and we can keep that train moving.
So I feel like the next step up from a home-based business may be creating an LLC.
Mm.
What would be the advantages of an LLC?
Another good question. Industry specific, I'll put it like this. If you're in the service industry, LLCs are perfect. If you're in the holding property, LLCs are perfect. But if you want to raise capital tied to your ideal, maybe an S corporation as opposed to the LLC. Because how you create the income and the distribution of income on your vehicle will say a lot about your ability to raise capital at some point and to bring on other investors. So my clients, once I determine what is the outcome that you're trying to achieve and what is the method that you want to achieve it by, I would say right now 60% of my clients are all on LLCs. But at some point, some of those clients, those LLCs become S corporations. And we become an S corporation after that normal growth cycle of the LLC. And now the LLC might want to hold assets. The LLC might want to bring in more partners. And it's easier to do it that way. And for the owner now to take a salary as opposed to guaranteed payments through creating the S corporation and having the W-2. And then we've created 401k vehicles off the S corporation. So it can get as sexy as you want it to be. But I think what the key thing is, I want to have a plan for growth for you. And so once we identified and we're growing that business, there's a laundry list of things that we can do to defer and reduce taxable income.
Okay, so that was pretty much my next question is, let's say someone's business starts to become profitable. Is there a way to minimize having taxable events, especially when it comes to capital gains? And if so, how?
Yeah. Yes. Listen, in the real estate game, and Jalan, you know, depreciation. Depreciation is a non-cash expense. And so Section 179 is a code, an IRS code that deals with depreciation on listed property. And so how you treat depreciation, how you look at deferring income, how you create cash value in insurance products that are tied to your business, key man insurance policy, which is a deduction for your business, but can build cash value into your policy through your business. There are a number of tried and true tactics that will allow you to reduce taxable income, grow your business, and then be able to, at some point, when you gave my introduction, business, sell. At some point, how do I exit the business? And I think with that in mind, what's on the books? What's the value on the books? What is the goodwill of the business? That's my time in my business for 20 years. What's that valuation? How will I exchange that goodwill out? How will I cash flow that goodwill? So I think those are the things that's my stimulation. How do I figure this out with the client and put the best valuation on this business so you can exit, have the best look on this business so that you can borrow money, has the best look on this business that you can secure outside investment into it. And it all comes from that tried and true building block. Income minus expenses is profit. How do we increase income? How do we have effective expenses? And how do we defer and reduce taxable events, capital gains on this profit? And a lot of that, Jalan, is built upon how you structure it out the gate And what are your intended goals and your milestones in your journey?
Okay. So I've heard everything that you've said, and it's no doubt that you know what you're talking about, right? So let's say someone listening to this episode decides that they're ready to start a business or get their finances and assets in order, and they want to work with you. What could they expect as a client?
Well, the first thing is a conversation. FOC, free of charge. What I want to do is much like what a doctor does when you come to our office. I sit with my clients, and then the first thing that I want to have from them is them to complete what I call a personal net worth analysis. It's just like the doctors getting the blood work on you, your vitals, your prescriptions. It gives me a baseline of where you're at right now versus where you should be and where do you want to go. And so that's the foundational piece that I have with all my clients. I want to get to know you. I need to be able to understand your risk profile, your risk tolerance, the business that you want to be in. I want to be able to give you some pertinent feedback on if I think you can do it or not. Early in my career, I had a client that was working for a Fortune 500. They took an early retirement. They got a stack of money and they said, Norman, we want to open our own Subway franchise. And I met with him and his wife and I did the business plan for him. And while we were talking in our interview, and I was thinking to myself, I don't know if you cut out to be an entrepreneur. But I held my mouth. I didn't quite communicate that to him. And they went to Subway University. They got the franchise. And 6 months in, I get a phone call. They said, Norman, we don't want to do this. And I kind of knew that from the beginning. And I said to myself, I'll never do that again with my client. If I feel it, I'm going to speak to it. And I only could get them 40 cents on the dollar to get out of it. And that was a very big learning for me in my younger state. Everybody's not built for this. I'll make my assessment based on my experience. Can you do it? And then I will hold you accountable with the tools and the feedback that I give you to achieving the outcome. And business is rough. Entrepreneurship is rough. But it is one of the most enjoyable aspects of my life to be able to sit down and say, nobody did it, I did it. And they can't take that from you. And then I can scale this. And then you see people franchise it. But it's all built upon their ability and their willingness to say, I can make it happen. And I love to be part of that journey with anybody that comes along with me.
I like that a lot, and you can tell that you're passionate about this, and I love the fact that you use that example to have that hindsight to say, you know what, I knew that, and I should have spoke up, and I didn't, and I wasn't looking out for my clients in the best way that I could have because I didn't speak up.
That's right.
So let me ask you this: when it's all said and done, and you look back, what is it that you want Barnum Group to be known for?
My clients now tell you this it's my tagline, if you will. I've never written it down. It's just this simple. Your life is better with me than without me. And if that ever changes, please fire me and refer me to the brother you hired. It's that easy. If you are effectively creating value for folks, they'll never leave. And I think that has been the number one thing for me is if they on my tombstone, he created value for me. That's it. I don't want to receive or accept money for services, and I do not achieve outcome. Activity is not outcome. Outcome is outcome. And I think that's the biggest thing that I drive home to my clients. I hold myself to that own standard. And if you put it on a gravestone, brother made outcome, and I'd be good.
I like that. I like that a lot, bro. All right, so I got one last question for you. If you could use your platform to educate anyone who might be struggling with their finance management and might be uncertain of how or where to start, what would you say?
You have to make that first step. And that first step is a conversation with the brother or sister looking back at you in the mirror. You have to own it, not lease it. You got to own it. And that has been the foundational piece of change, if you will. I've had a lot of folks that they've been leasing the whole time. They were never trying to own their success. And if I can get you to own it, then I can get you to implement strategy and we can achieve those outcomes. But it has to begin with you. And I think those are the things, if you really press me, there are a lot of systemic issues that we are still facing as a people that you can lay down and say, this is why it ain't happening. But we come from a people that figured out how to use hymns as codes for the Underground Railroad. We can make it happen. Own it, buy into it, believe it, and execute it. And I think that's the number one thing. Anybody hearing me right now, the success is in you. Greatness is in you. My goal is help you find and achieve that greatness. I didn't put it in you. It is already there. You have to be able to believe it and begin the extraction process, brother.
Wow, that gave me goosebumps, bro. Thank you so much for this. I think that if someone is listening and they have been on the fence about extracting that greatness, I think that this may have been an opportunity for them to hear something that will allow them to do that. So I want to thank you for sharing your knowledge, your expertise, and we've been talking about doing this for a while, and we finally got the opportunity to do it. So I'm really grateful for your time and for your willingness to do this with me, Norman.
Hey, thank you. If you want me back, I'd be happy to come back and we'll chop it up again.
Where can people find you online or on social media if they wanted to look you up?
My Instagram is Norman Barnum. My Gmail is normanebarnum@gmail.com. And you can find me on Facebook also under Norman Barnum. I'm in the process right now of redoing all of my executive branding and personal branding. So stay tuned. There'll be a rollout a little later, maybe third quarter 24. But like everybody, even for my clients, I'm still looking for the greatest version of me. And it's out there. And that's the game. And this is part of now, Jelana, I'm 63 years old, May 17th. And I got another gear to get. And I'm looking forward to chasing it. 100% of what I can be. And that's what I'm still looking for. And that's what I still try to infuse and look for in my clients. And we push each other. And so that's the game, brother.
All right, man. Well, hopefully, while you're looking for that last gear, you can help a lot of other people get into that first gear that they've been waiting to get into, and you can use your tools, your knowledge, and your experience to, help them get over that little hump that they may be stuck on. So again, I want to say thank you for this. Thank you for your time. Thank you for who you are. Thank you for what you do, and thank you for how you do it.
A pleasure, brother.